Wall Street went for a brisk gallop last night after the chairman of the Federal Reserve Board, Jerome Powell, signalled in a speech that the pace of US rate hikes would be slowed in December. They've been hiking by 0.75% at a time for each of their last four meetings, so last night investors adjusted their pricing for a 0.5% rate hike this month, resulting in a 3% rise by the S&P 500 and 4.4% by the Nasdaq. And that produced a 1% gain on the local share market led by mining companies. The resources sector has surged 20% since the start of November. Jerome Powell's words also pulled the rug from under the US dollar, which sent the Aussie currency scampering to 68 US cents, which it hasn't seen since early September. And commodity prices all rose, mainly because the US dollar fell. Oil, iron ore, copper and gold all went up. Capital city house prices have now fallen 7.5% from their peak in April, but regional prices have fallen less, having risen far more during COVID. And here's a chart of this decline in capital city house prices so far, compared with a few previous other ones. It's the fastest decline and is forecast to shoot past the previous biggest falls in 1982 and 2017 and end up twice as bad as them. The good news is that affordability is improving. It now takes only 10 years to save for a deposit instead of 11. Business capital expenditure fell 0.6% in the September quarter, according to the ABS, and is now just under 6% of GDP, the lowest since the early 1960s. And finally, Australia plays Argentina on Sunday morning in Qatar. Here's a chart of GDP per capita for the two countries. So I'm calling that 1-0, and that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.